You mad? I ordered my flowers 2 days ago. I mean, it's tomorrow, right? Valentine's Day. Oh, Nick, we're live. Sorry about that. Welcome everyone to the Academy. Hopefully my little faux pas there was a handy hint in case you need to get anything organized for tomorrow, some Valentine's Day. So we're the 13th of February right now. Nick, you did a recording about a week ago, and you didn't invite me along, which was disappointing because I didn't have a chance to ask you loads of questions. You did a video on Apple, NVDA, and the S&P in general. I have got some questions, and I'm going to use this session hopefully to answer those. Right now, I'll talk about it from my own point of view. I'm seeing nothing that is entertaining me, nothing that is really putting me in one direction or another. I'm not feeling bullish, I'm not feeling bearish. I think we're at a critical stage in the market, and I'm just, I, I don't know. I don't know. We've had CPI out yesterday, came in slightly hot. The market didn't like it, but there was a great recovery in the S&P and the Nasdaq. So I would suggest it points towards a more bullish close from those two. I mean, we did have the initial fall off, but back in there, we've just had PPI out. No real reaction there, so it hasn't. I think that the thunder was stolen by CPI yesterday. And we've got retail sales tomorrow to give us another few clues. I personally, as I say, I'm not feeling anything. I'm going to sit on my hands for the rest of the week. I'm not going to do anything. There is no edge to anything I see out there. So I'm going to literally return to base, sit there until I can see when the dust settles where we're going to be. Because who knows? We're living in Trump 2.0. It's very much like the first version where anything can be said over the weekend, anything can disturb this market. So I personally just going to kind of just chill for a little while and see what's going on. But I'm very interested in your thoughts. So Apple, Nvidia, S&P, you were feeling, I think, or slanting towards the bearish side in the recording. What do you think now, Nick?
Well, firstly, welcome everyone to the Academy. I will share a disclaimer. It's easier this way, so here we go. I hope you can read that. Thank you.
All good?
Now, let's share some charts, if I can find them. Do you see the chart?
I do indeed. So bring on the waves.
Right, well, okay, this is where we were. Summary, the red is representing the times when I did some recordings. The first three were with Torsten in the grey market talk. And at the time I was bearish here in November. I mean, that was sort of at the time. I mean, the market was still, bullish and heading higher and crazy view. But my view at that point was the correction will begin. So trying to forecast, firstly, that the trend was kind of over. And secondly, at the time, trying to forecast where it will go to. I think the first video I said 5,200, and I immediately got slapped down by a number of people who saw that recording and said, what? Really? But, let's have a look at what happened since that time. And if you see the price action of the S&P, actually, we did correct. So correction means sideways, doesn't always mean downwards, but maybe that's it for the correction. We don't know. So what I want to do today is to explore the possibilities of if it's going to go down, what do we expect? If it goes up, what do we expect? And I'm going to look at that for both the S&P, for the S&P, Apple, and NVIDIA. So let's take a look here. You could probably see the kind of the view, the bearish view here on the S&P from the high I'm putting here at the beginning of December, and then a three-wave correction. You can see the A, B, and now, I think we're doing C, but let's see what prices do over the next few days. And I think, if C does take hold, which is still my preferred view, primarily driven by, I think yields above 4.5%, I think is negative for risk assets. So That's why I'm leaning towards the bearish view, but obviously price action is testing that view right now. So that's the kind of the bigger picture view on the S&P. And if we kind of go down to a smaller time frame here, this is a 2-hourly thing. Broadly, here's that sort of 6th of December high. I've given it a different label here. Don't worry about that for now. But, in a nutshell, that's still a 3-wave move. So a wave A, a wave B, wave C, and wave A is made up of 3 waves. First wave A is the leading diagonal triangle for any Elliott geeks out there. Wave B goes above the high of this level here, and that's called an irregular flat, also for the Elliott Wave experts out there. And if correct, then we should be seeing wave C down. What do wave Cs look like? They are in 5 waves. Generally, when you're looking at this thing from an Elliott Wave perspective and you see, what have we done so far from this high in wave B? We've done 3 waves only. We haven't broken the high of any of those waves, so it's still open to, we've done wave 1, we've done wave 2, and now we need to do 5 waves in wave 3. You can see that here. Then we need to do wave 4 and then wave 5. Target, sort of this green box somewhere, 5,650 is the sort of the less bearish view that I've got. And then obviously what happens after a wave 4 is that we see a wave 5, and then that will sort of finish this sequence. But what if I am wrong? I've been wrong before. And in fact, this thing is going to move immediately higher. What does that look like? And what I've got here is this similar kind of, it ignores, again, as I say, the what degrees I've labeled here. But here we have still that 6th of December high in 3 waves. Here I'm labeling it as a combination where wave 4, in fact, finished around the 13th of Jan. And then, we rallied higher in wave 1. Looks impulsive. Wave 2 potentially has then finished in 3 waves. You can see, that's the 3-wave move that we've seen. And then what should happen now is that this thing should continue to go up, then down in 3 waves. And here, I can just show, that would be the first wave of subwave 3, second wave of subwave 3, and then up she goes, and off to the races. Target, I guess, for this thing would be about 6,200, 6,250, there or thereabouts. It's not, as I say, my sort of preferred view, but have to respect the price action. If we start to see overlap on this, on these highs on the way up, then I think that becomes the preferred view. So now we look at Apple, and so here we are going to start with, where was the high? The high was registered on 26th of December, Boxing Day. And if this thing is going to correct, then the correction should last in 3 waves, right? So, and slight complication here in what you're seeing a 1 and a 2 and not an A and a B. Well, this could be wave 1 of wave A, or it could be all of wave A. So let's say it's the less bearish option, and this is sort of wave A complete, then wave B here. Now wave C would be in 5 waves. So first wave here, second wave here, and you can see we've just made a new high above that. So it's still alive to be counted here, wave 2. It's sort of at the 61.8% retracement level. And it's still in this box. If prices break up above 243, which is 78%, 78.6% retracement of this wave, then I would say it is more likely that we're going to break higher. It will be a different structure, and then the next important level before the old high at 260 is reached is we'd have to break this 250 level, which will be a 78% retracement of that leg down. If we do break that, then I'm wrong, and down she goes. And then what does that look like? Then it would look like this, where in fact wave one was the Boxing Day high. Wave two was at the end of January, 27th of January, something like this. And then we've done wave one of wave three, wave two of wave three, above that's a 200-day moving average, by the way. You can still see that, with prices holding above that, structurally, the market is still in a bullish phase. And I think that's going to be the critical level for institutions, as always, to see whether or not it goes up or down. So if it does go up from here, then wave one, wave two, and then you can see wave three, wave four, wave five, and then we have to finish, that's wave three, then wave four, then wave five of wave three. Then it's going to be a wave four, and so on and so forth. So, that's the story of Apple. The bearish view and the more bullish view. As I say, first critical level 243, next one is 250. But really, I don't want to see it above 243 if indeed it will go down. And then we can do the same thing for NVIDIA, and check out the chart on NVIDIA. That would be for this one, how we're starting with the pattern. Again, where was the high in NVIDIA? It looks like that was this point here on January the 7th. And it's the same thing, same view on Apple. It's either going to be ABC, where I've labeled one is actually all of A, or that's only wave one of wave A. And you can see, if it's only wave one of wave A, then the depth of the retracement is going to be much, much larger. So I'm looking for 5 waves down now in wave C. So let's just say that's wave A, and let's just say that's wave B. Then I'm looking at 1, 2, 3, 4, 5 for all of wave C. Then that would be enough. That would be 3 waves. That would be a correction. That would take us down to sort of around somewhere 90 to 100 area. The more bearish view would be that, we're completing this kind of pattern, and that's wave A, and then we do wave B, and then wave C comes after that. So, where would I be wrong here, or where would I feel uncomfortable here? And I would always look at, what was the last wave, and that was from here to here. Do this Fibonacci retracement. So anywhere above 140 would put the probability much higher that, we're probably heading up. And what does heading up mean for NVIDIA? That would look like this. So here, I've had to label, because the rules on Elliott Wave, you can't just sort of put labels where you want to. So I've had to count the high on the 21st of November as the sort of level where wave one ended. And then we saw 3-wave correction. Wave A down in 17th of December. Wave B then goes above wave A. That means it's called an irregular flat. So 3 waves, wave A, 3 waves, wave B. I mean, this looks very plausible as a count. And then 5 waves in wave C, wave 1, wave 2, wave 3 down here, wave 4, wave 5. And now we're doing 1, 2, 3, 4, 5 on the upside. So, that's your option, going up and going down. And, the jury is out. And the way that these counts look to me is that the decision is going to be in the next day or so. So could either be a Valentine's Day massacre, or it could be, a nice Valentine's Day gift for bullish trades. So decisive move, it feels, in the next day or two. And let's see.
Yeah. Well, that confirms what I was thinking. I'm not feeling overly bullish, although the markets are performing relatively well. I mean, the S&P is slightly up today, even after that slightly hotter print on PPI. I'm not overly bearish either. I'm kind of, as you have pointed out through the charts, I'm kind of at that point where I think it could go either way. In terms of what I'm not feeling with the S&P. I mean, what's going to drive it further? What's going to drive it higher? The Mag 7, you've been discussing a couple of the names there. I've been looking at the charts, NVIDIA, the charts you've just shown. It looks like it was slightly rolling over, but right now it's up. It's up, 2.5% virtually on today's open here. I know it's still early on the open. Tesla was looking like it was rolling over, but again, that's up almost 5%. So off we go to the races there. Meta was the kind of the standout. That was just having a stonking time. And okay, it's pretty flat right now. So nothing really to write home about there. Apple, obviously you've just been discussing it. That's pretty flat right now. What do we think about Microsoft? That seems like it's going slightly to the downside. So if the Mag 7 aren't going to put in the shift, what's going to drive the S&P higher? And that's where I am, and you've confirmed it for me. I think I'm right to sort of sit on my hands for a few days, see how the dust settles, so to speak, and then we can take up the conversation next week and think about where perhaps we'll be going. Maybe we'll have a little bit of clarity there after we get through the weekend. As I've already said, Trump 2.0, who knows what comes out of the weekend, what kind of statement, what kind of announcement. We've got to be on our toes. We have to be on our toes, and I think this is going to be the case probably for the entire year to be very nimble and to be able to nip back and forwards whenever we need to do so. But Nick, as always, thank you so much. That's given me and my thinking some justification, some clarity. I'm really happy about that. So thank you so much. For the rest of you, please, if you haven't already done so, please like the videos, subscribe. As always, these conversations, we have daily conversations, Nick and myself. And sometimes when we think it's relevant, when we think you'll want to hear it, we press that record button, as we've done today. And I hope you found it a little bit useful. If you have any questions, if you have any comments, please use the comment section below, and we'll get back to you as soon as we possibly can. If you are celebrating some Valentine's Day tomorrow, I hope you have a wonderful day. Have a great weekend, and we will catch you next week. So have a great time. Nick, any last word from you?
No, Valentine's Day. Best I go and do something.
If you haven't already, you better do that.
Absolutely. Thank you for that.
Thanks, Nick. Talk to you soon. Take care.
Thank you.